Good afternoon once again, although it is 1 in the morning for me, but hopefully it is a more appropriate time for you. Today I'm going into every single young man's favorite store to go in with his mother while you're Christmas shopping, Ulta Beauty. So, Ulta has most likely been declining. I can't imagine they're outperforming too much, although their stock chart looks good, which we will get into later. But we are going to get into their financials first. They just reported earnings yesterday now because, again, it is 1 in the morning for me. But I'm recording because I want to. So going to get into it. Ulta Beauty, let's do it. Make sure to subscribe. So right off the bat, starting off super strong with Ulta, you could see their same store sales percentage has been positive percentages, but declining, and is now looking like it's going to be negative. Net sales per person, or sorry, per retail square foot has been declining sharply. Although once again, we are actually seeing an improvement, or an estimated improvement, which is something. Selling space square foot looks like this is just their total amount of selling space. And number of stores is also actually supposed to be staying flat, but again, has been increasing, which for retails is fairly good. You could see their stores closed and their store opened. So overall, not too bad here. Obviously, same store sales is decreasing, but it looks like sales per square foot is going to be increasing. So that is definitely something that is positive. So let's just blast through the through the snapshot here. Target price looks good. Long-term growth rate at 2%. Could be a little skeptical. I'm going to do the very rare zero point 0.5 for long-term growth rate there. Just because it could be a little skeptical at 2%. That's probably not great. Overall sales for them is really good. Obviously slowed down a bit in the past year. Even during COVID, they looked pretty solid. Really everything with their sales is looking really nice. Yeah, operating income again looks all right. You could see they are taking a little bit of a hit in their operating income. Now, this is also an estimate, and 2024 finalized is here. So I'm going to go off of this and see that their operating income increased. And that is all I'm going off of. Too bad. Net income also looks good. Slight increase there. EPS obviously is going to look about the same. And then total shares is kind of mixed. No, actually declining. Definitely so solidly declining. So good to see there. Always like to see declining shares. So let's go to the balance sheet, see what's going on here. So their cash looks solid. They actually don't have a lot of debt. Usually with these kind of like, I don't want to say legacy companies, but like retail, things like that, where it's like retail companies that you would think they would be declining, but you can see here their cash looks really solid. So assets again also look good. Short-term debt is not a lot. Long-term looks solid. Not really seeing declines, but it is consistent, which is also fine. And then retained earnings looks like they took a bit of a dip, but are going back up now. So everything looks good there. We will give the credit and let's go into cash flows. Cash flows should look pretty solid for them, and it looks like they do. Changes in working capital is fine. Funds from operation looks like it's fairly consistent over the past few years. Investing activities looks normal. A little bit of investment purchases, which is fine. And then obviously we see that change in capital stock right here in financing, which is good. That's them repurchasing their own shares, decreasing their own supply, which is always good to see. Free cash flow looks solid. Going into the use of cash, we have a little bit of issuance, but got paid off. Nothing too bad there. Giving the credit, and then obviously all their stock repurchases look fairly solid. Very solid, I should say. For SGA to sales, we're looking at slightly below their 5-year average, which is perfectly fine with me. Net margin is high for their average, which again, one thing to note is that's also with headwinds from COVID. So obviously COVID lowered their margins. So it could be skewing the average a little bit, but being 2% over it is honestly really solid, especially in retail. And same thing with their returns. They look really good, um, which honestly wasn't expected by me at all. Their returns are very significantly above the 5 year average, even when you take into consideration the whole COVID thing, but not too bad. Long term debt is at 70%, which is, again, a very solid number, especially for a brick and mortar company like this. That is actually really good. So, overall, I can't believe I'm saying it, but Ulta scored a 96, which doesn't seem right, but that's just how it works out. Now, again, I say this a lot. This financials review is not indicative of the company as a whole. Obviously, there's outside factors and everything. Now, the important things are those industry metrics, which we saw here, which most seem pretty good, other than same store sales, which is projected to decline. But other than that, everything else looks fairly solid. So Ulta could actually be a very solid company, scoring above companies like Celsius, which is one of my favorites, CrowdStrike, Home Depot, even, which is kind of crazy. They scored higher than Palantir. They scored higher than Disney, Shopify, and they're sitting right below companies like Meta and Nvidia. So that is definitely something kind of crazy. Let's go into their earnings and see just hopefully we see some extra things on these seemingly outstanding financials, which we will see here. Comps looks like increased way more than the expected decline, which is good at 0.6 up compared to a 2% expected decrease. Margin increase year ago was a little bit of a decline, but that's not too big of a deal. SGA looks like it decreased fairly decent amount. Operating margin increase. This is the big one. That's the important one. That's what we want to see. Doesn't matter what the gross margin is or that it declined. Beat on operating is huge. And then inventories and sales increasing is exactly what we want to see. I can't remember what company it was that I reviewed the other day that had a ton of, maybe Dollar General. No, it couldn't have been. But had a ton of inventory increase, but no sales increase. That is really bad. That is the exact opposite of what you want to see. You want to see them both increasing. So this is really solid. So overall for Ulta, let's get into the stock chart. We can see they were following a fairly significant uptrend, kind of broke through it, and now they're in sort of this wedge formation here. Now they are at the top of it, and honestly, in my opinion, let me just zoom a little easier here. In my opinion, their earnings report was really solid. So again, obviously reported today is Friday. They reported yesterday night. So today we should see this stock hopefully break out of this wedge. If they do, I honestly might consider purchasing it myself. I would not recommend that to anybody else. I'm not qualified to do so, but me personally, I honestly think I would be interested only because of the upside here and how decent their report was. But overall, you can see Ulta has performed very well over its history, IPOing in 2007, which is one of the worst times ever to IPO, and they're still very successful. So overall, that's all I have for Ulta. Hope you enjoyed. Hope you learned something. Make sure to subscribe, and I will see you in the next video.